Hello and welcome to India Market Open. It's been 4 straight weeks of gains. It could be a week of consolidation. Morning, Tamanna, but there's so much data. You've got India CPI, you've got US CPI, you've got global flows, and of course, 4 straight weeks of gains. But it still remains a buy on dips kind of market, right?
You know, this is what happens when you come off a long weekend of trade. The news flow is just enormous. So many things have happened over the last 3 days. It's really been busy, and you know, let's break it out for you one by one. We'll be talking about all the events which are going to impact trade today, and there's a host of them. Let me begin with what global markets look like, at least on Friday's close. It was a day of sell-off on Wall Street. Definitely the Nasdaq the most hit, down over 1%, thanks to Nvidia. So finally that Nvidia steamroller took a pause, and there was a drop over there in Nvidia stocks, 5% down. But remember, week on week it's still about 6% up, so it's just a pause over there. Jobs data came out on Friday, and that was important because US jobs in February have run hotter than expected at 275,000, way above estimates. Jan jobs data has also been revised upwards. So on the face of it, an economy that's growing too fast, bad news for rates. But on the other hand, unemployment rates have also gone up. Wage growth has been low. So unemployment at 3.9% was higher than what was expected. On the face of it, the Fed is on track to achieve what it wants, which is lowered inflation without impacting growth. So if you put those two together, the outlook could be positive. And that's what you're seeing as far as bonds are concerned. The US 10-year early this morning, at least, was at 4.05% on the back of this jobs outlook. So that's a positive. I want to pull up Asia. Asia has not had a great start to the morning, and we'll pull up all the indices. Look at the Nikkei, about 2.5% down. So following what's happening in Wall Street as well, Hang Seng at least up in the green. We'll quickly look at the Indian implied open and see what we're set up for, because there's so many factors at play today, and so far we're looking like we're up in the green and set for a good start to the day. But so many stories will play out, whether it's the Tata Group stocks, whether what's happening in banking and financials, insurance companies, all of that is going to be on the anvil. Just a quick look at what the fund flows were like at last close, which was Thursday for us, before I hand it to Samina for the trade setup of the day. And the figure I found interesting here is look at the FII buys. We haven't seen that robust a figure in a while for a single day, at about 7,300 crores for FIIs. DIs have also been buying. And what Amphi data, which came out over a Friday, is telling us that there is a rejig by mutual funds as well in the kind of companies they're buying, because of SEBI's push for lowering their risk to small and mid-cap stocks. So all in all, that's at least the global piece of it, but we're set up for a decent day, Samina.
Indeed. In fact, we'll be playing catch-up, right? You had Thursday and Friday global cues to react to, and like Tamanna indicated, it's been a long weekend, so you're coming back to trade after a few days, and hence the euphoria and the excitement may actually continue. But just to add to Tamanna's point about FI activity, remember FPIs have made a comeback in the last 2 months. For the month of March, that number stands at 6,139 crores, following a 1,540 crore buy figure that we saw in the month of Feb. Jan is when we'd seen a massive outflow of FPIs to the tune of 25,743 crores. Beyond equities, FPIs have been aggressively buying in the debt market as well. That number stands at 1,025 crores for the month of March so far. But as we go into this week, a quick check of what implied Nifty is indicating too this morning. Global cues, like Tamanna indicated, are almost mixed, but it looks like we are setting ourselves up for a gap-up opening. A 100-point open on implied Nifty is what we have as we gear up for trade. Lots of factors to watch. While trade will be about specific sectors, sector rotation may continue in today's day of trade. But remember, 7th of March saw the markets close at a brand new high on the Nifty and the Sensex both. Markets were volatile, but nevertheless ended on a positive note for the 4th straight week. Similar trend is expected as we go into trade this week. The market continues to be a buy on dip, and that clearly is the strategy not just for the benchmark but for sector-specific trade as well. Well, if you look at option data, that indicates that 22,500 is expected to be a crucial level of support coming in for the Nifty. The next hurdle will be 22,700, and 22,400 and 22,000 on the downside are going to be important levels of trade. So 22,400 on the downside and 22,700 is going to be the trading range for this week as well. Well, you could see a week of some consolidation. Minor profit booking cannot be ruled out, given that the last 4 weeks have been pretty solid and have been a northward journey for the index. A couple of data points that will give the market some direction. You've got inflation coming in from the US on the 12th of March, expected to be pretty similar to what we've seen over the last few months. You've also got inflation data coming in from India. Now, this is going to be critical because this is the last inflation reading before the RBI policy meets on the first week of April. Well, apart from that, from data that we've picked up, it seems like the broader markets are underperforming the benchmark. So what we've really seen is a small and the mid-cap space decline in last week's trade, and expectation indication that trade is now moving to the large cap space. So if you look at the bias is the next leg of rally will come in from some of those large cap names. Couple of IPOs. You've got 7 companies that will go out and raise money. You've got 5 listings as well that are lined up this week. So, Tamanna, it's going to be a busy week, but what's interesting is after many, many months, it seems like the bias will now for a change and eventually move the large cap index. And we saw that last week while the Nifty did okay, the mid and the small cap index actually went home with pretty significant cuts.
Especially the small cap stocks definitely had significant cuts. And, you know, Samina, this is right on course to what has been discussed on this channel right from the end of calendar year 2023, that rotationally that's going to happen. You also have policy push now in that direction. But speaking of large caps, at least one set of companies which are going to be under pressure today is Tata Group stocks and Tata Chemicals in particular. So I just want to start up with the sort of news flow we've seen over the weekend and what impact that's going to have. So now this Tata Chemicals story in itself is quite interesting. You will remember that this stock rallied about 34% just in the last 4 trading sessions. This was the close that you saw on Thursday, and I just want to pull up for the last 1 week if we could. Now, newspaper reports over the weekend, starting actually with the Times of India, reported that Tata Sons is looking for ways to avoid listing their IPO. Now, you know that they need to because of SEBI rules from 2021, which has said that they have to be categorized as an upper-level NBFC. So they're supposed to list. The deadline for that is September 2025. There was a Spark Capital report which said that if they have to list, Tata Chemicals would be the best play. And that was all it took for that stock to spark massively. Now, these reports that suggest that Tata Sons might be looking at alternatives to this could really see some backslide or some sell-off in these counters. So that is one that I would look for. The reversal of the IPO outlook may see a sell-off. The other one to keep in mind is, of course, SBI, and we're going to try and have this conversation later in the day as well, because there's a Bernstein report out on India financials which has downgraded SBI to market perform with a target price of 780. Now, this is quite significant because it says they see less promising trajectory for public sector banks on weaker deposit growth and lower liquidity buffers versus private banks. Now, in a market which has been completely gung-ho about public sector banks versus private banks, this is a reversal of mood, no doubt about it. And we'll have to wait and see what the impact is, not just on the SBI counter, but on the PSB space as well. Another reason Bernstein gives this, it says aggressive pricing and loans and deposit will result in muted earning growth. They say the valuation gap has narrowed significantly. Remember, what was going for public sector banks were their relatively lower valuations. Life insurance stocks are the other one. You had Feb data coming in. And now typically, yes, in Feb you might see good data because remember, before year end, anyone who wants to do the tax savings sometimes does use these instruments. So perhaps that's one of the reasons that you saw Feb revenues for life insurers surge 48%. LIC had the strongest year-on-year growth In new business premiums, SBI Life reported the highest revenue among private peers. There's a clutch of brokerage notes out this morning as well, which are underlying the positive sentiment. So look out for an LIC, an SBI Life, an ICICI Pru, and all of them could be seeing some upside. Just the thing to note about LIC is that their market share has fallen 520 basis points to 58.6%. They're still dominating, of course, but you're seeing a consistent slide in the behemoth's market share as well. SBI Life's revenues saw the strongest growth of about 30% on a year-to-date basis. So insurers, life insurers, public sector banks, Tata Group, especially Tata Chemicals, definitely on the radar. But there's so much more to cover, isn't there, Samina?
It is, and it's going to be another bad day, down day rather, for JM Financial. We'll take you through the latest updates that took place between Thursday and today will be the first day of a stock reaction coming in on JM Financial. SEBI has barred JM Financial from taking any new mandate for acting as a lead manager for any public issue of debt securities. This SEBI order comes after its investigation into a specific public issue of debt which was executed in 2023, where JM Financial was the lead manager and involved two other JM Financial entities, which is JM Financial Products and JM Financial Broker. SEBI has observed that these transactions involved all three JM Financial entities, so an arm's length distance was not seen in these transactions amongst the three entities. In fact, the moves were predetermined and done in a synchronized manner with unnaturally high retail subscription. That is what is going to put JM Financial back in focus this morning on back of being barred to be the lead manager of any of those NCDs going ahead. The stock will be reacting negatively. Of course, JM Financial has said that they're cooperating as and when they've been required to do so. Well, moving on from there, another company that will be in focus, Interglobe Aviation. Watch out for this one. The co-founder Rakesh Agarwal is reportedly considering doing another round of stake sale. There were reports in the early part of the weekend where this quantum of stake sale was about 3.3%, but there are some reports this morning that indicate that the stake sale could be to the tune of 5.8%. This stake sale will raise about 6,600 crores, the floor price set at 2,925 rupees a share. Well, this is part of the Rakesh Agarwal strategy where he has been gradually offloading or reducing his stake in Interglobe Aviation. Well, another one to watch out for is going to be Rail Vikas Nigam. This is actually a fairly big one. They've secured an order worth 1,298 crores from the Himachal State Electricity Board. The stock went home flat, but the counter could see a big reaction because this order win is a significant one in terms of its order book. So those are the three on my list, but I guess the list continues, Tamanna.
Yeah, and RVNL actually is going to be a hot one today because they have one, as you said, from the Himachal State Electricity Board and the other one from the Madhya Pradesh Metro Corporation as well. But just a word on JM Financial. I mean, that stock was actually in recovery mode on Thursday's trade, up 3%, with the idea that, that whole fear was overblown. Now comes this sledgehammer on, they've been banned or barred from, NCDs as well in that part of the business. What is going to be the spillover effect really is the question, and we're going to be discussing that more on Editor's Cut, but one to watch out for. Just a couple of stocks. I want to talk about the real estate pack. And Samina, this is a story that you're going to be detailing, but exciting. REITs now in small and medium section of real estate have also now been allowed. So that's a 50 crore sort of a pack. The minimum investment has also come down. Is this going to be a good investment or not is the question. So I would watch out for real estate stocks, definitely. DB Realty is another one. We reported that they will be raising up to 1,500 crores versus a QIP with a green shoe option of 500 crores. The issue price is 258 a piece. So DB Realty, another one that should be on your radar. And HG Infra is the other one. Actually, a whole host of them in terms of order wins, and we'll get Anushi to give you those details later on the show. But HG Infra one that I want to put out there for you. They've been declared as the lowest bidder for 945 crores on an NHAI contract for a highway construction project in Andhra Pradesh. So all that and more coming up. But let me go across now to Alex on the editor's cut with the attempt to put all of these stories into a bit more perspective, Alex.
Absolutely. Thanks so much, Tamanna, for that. We'll start with the regulatory action on JM Financial, because this probably has implications for the wider space as well. I do want to read, and Vishy is going to break that down for you. Samina is going to talk about the small and medium REITs, the implications of that for you as an investor and also for the space as a whole. But on the JM story, I'm reading the statement that they sent out last week after the RBI action. They said, after a careful and detailed review of the order issued by the RBI, we strongly believe that there have been no material deficiencies in our loan sanctioning process. That was on the loan side. There was practically no response to the SEBI action. There was joint action by the SEBI and the RBI. Now we know why. But what is the latest action now?
Yeah, so just about the statement now, right after the SEBI action, the only statement that came from JM Financial was that they are unable to ascertain the financial impact of this action, and that they will cooperate with SEBI. They didn't sound so cooperative with the RBI. But just to put things in perspective, what SEBI essentially looked at was one NCD issuance. Now, of course, they're saying that they're looking at other stuff, but at this point in time, the debenture issue is what led to the action that SEBI is taken against JM Financial. There they found that JM Financial Products was acting as a lender to investors. They were getting retail investors who come in and buy into these debentures, and then on the listing day, they were selling the securities that were bought by these retail investors to institutional investors, which is essentially JM Financial Services. So they acted as the lender, the operator, and the borrower. So that became, according to SEBI, that was a shocking sort of set of events. And the way that this was done, with the timing that it was done in, looked like it was planned well in advance. The problem happened because they promised certain returns to these investors. The securities were actually sold for a loss. It's unsure which debt issuance they were talking about, but sources
2023.
Sources say it's Piramal Enterprises, because that's where the timing matches. But we're not getting into that part of the story. This action follows just a day before that. The Reserve Bank of India said JM Financial Products has been showing some lapses in the way that they were doing the debenture financing as well as IPO financing business, and therefore they've barred from lending against securities.
But two questions on this. One, you've laid out what they did. We've also spoken about what the SEBI has said. What does this mean for JM Financial, one? And the second part is the wider space. One would assume that if one entity is doing this, and they've said on the RBI action that this is industry practice. So what does it mean for the industry?
For JM Financial, as far as they're concerned, lending against securities and their debenture financing, debenture lead manager business, all of that goes away, right? And that's a problem for the entity, because they were a large player in the NCD market. Now they can't do that business going ahead, at least for the foreseeable future, because SEBI investigation is likely to take another 6 months, and then after that there will be, of course, some amount of back and forth between the two entities. We'll see what happens. For the industry, there's a problem, because the RBI has already sounded alarm bells about dependency of NBFCs on the bank financing route. So NBFCs were anyway shifting that fundraising to the NCD market.
Right.
Now, if there are questions raised about the NCD market, then where exactly do these NBFCs go and raise money? Because they need those funds to actually go out and lend. And if there is some amount of ripple effect on these entities, that's going to be a problem, because if the NBFC industry can't grow, then you can't support that bank financing in tandem.
Okay, interesting. So fallouts beyond just the issuance. And also, by the way, Sajid was talking about implications for SME IPOs and the possibility of oversight, regulatory oversight. The SEBI chairperson, of course, has gone on record to say that the IPO market has seen froth, and perhaps you could see some action there as well. All right, so a lot to unpack, of course, and we'll get more details over the course of the day. But let's turn attention to another interesting piece as well, which has to do with the real estate space. And interestingly, Samina, small and medium real estate investment trusts. I guess to a certain extent they want to get into the residential space or make that more lucrative. What are the key highlights here?
Yeah, Alex, I think the whole weekend was buzzing with what SEBI has done. They are ahead of the curve, interestingly. But let's just break this down for people who are confused whether this is good news for the real estate stocks. Is it great news for an investor? Let's start by telling you what a REIT is, right? A REIT, for a very simple reason, is like a jar where investors pool their money in, and that money is used to buy an asset. Currently in India, you've got 4 listed REITs, the likes of an Embassy, a Brookfield, which are only, or which were allowed up until Thursday to only invest in commercial real estate or malls. What the SEBI has done is they've come out and said that now smaller REITs, so the REITs, the traditional REITs have, of course, like the MCs of the world, are fairly large, has come out and notified that small, medium REITs will now be allowed. They will be allowed to have smaller sort of quantums of investment or smaller jars of money. And more importantly, I think what got the street excited is that you can now invest or have fractional investment in residential real estate, which means that the SME REIT can go out and actually buy an apartment, buy a floor, buy a second home, a villa. The minimum size of REIT has got to be 50 crores, going all the way up to 500 crores. The investors got have skin in the game because what they're really trying to do is protect investors, right, of 5%. Now, if you take a step back, are we saying that retail investors have never invested in fractional investment through real estate? Of course they have. Yeah. It's just been in a relatively unregulated market, right? By doing this, the regulators ensuring that there is some amount of protection that's brought in for fractional investment in residential real estate. But of course, when we say retail investors, I don't know how retail it's going to be. It's 10 lakh rupees is the minimum ticket size. So you're still looking at a segment that is considered more ultra HNI in that regard. So while this is great, gets a thumbs up, a lot of real estate companies like the likes of a Godrej Consumer are sitting on unsold inventory in places like the Godrej Properties in Thana and New Bombay would probably go out and look at the
even the smaller developers.
Structure. Yeah, so that comes in from a real estate sector play, right, where these counters will do well. But for an investor, now let's take a step back. India is a low rental residential yield market. Currently, rental yields in India are in the range of 2 to 3%. At best, you're looking at a 4%. How do you earn on a REIT? You get your rental yields and you get capital appreciation. Let's not forget that while rental yields are the 2 to 3%, where that's one function of returns coming in for investors, the other one is capital appreciation. We've all seen, right? Real estate has seen an appreciation now after many, many years of underperformance. If I have to peg a number to it, an annualized return, it's no more than 5 to 6%. Correct. Secondly, the bigger chunk of capital appreciation...
In certain markets, I must point out. In markets like Mumbai.
You mean best case scenario?
In the larger markets,
yeah. But what also is worth noting is when the appreciation comes in, it comes in from buying the land, building it, and then selling it. So the appreciation is from buying the land, right? What the REIT and SME has said is the regulators said you can only invest in properties that are 95% completed, which means they're already yielding rent and the appreciation has been taken. Beyond that, how does capital appreciation happen? It's going to impact the NAV only if you're going to go out and evaluate the real estate in some cases, or in other cases, sell the real estate. So you're not really going to see the chunk of capital appreciation coming in for a very long time. The other thing that I heard from one of the analysts yesterday was they said that while this is great, cost of compliance is also going to go up. So
why is that?
Too, because now you're going to have to you have to review your assets. You've got to do a lot more paperwork. You've got to get a lot more auditors in. While it was unregulated, it was easier because while there was a risk involved, the returns were slightly higher, right? But with being regulated, cost of compliance goes up. Getting a REIT to listing is also going to take some money.
So, quick question on this in terms of operations. This has come through. Would you have the same entity float multiple REITs because of the ceiling size of 500 crore, or is it each REIT will be only 500 crore?
Each REIT can go up to 500 crore, so that's one unit, right? I think the challenge is more on the downside because how many homes can you, think about it operationally. How often do you come across an apartment or a floor that's 50 crores? It's not very often. So the REIT might have to buy maybe an apartment in Bandra or in Bombay, a holiday villa in Goa, one in Bangalore. But all of that is very difficult to manage, operate and run. The other thing that I noticed was while all of this provides, the fact that you have REITs that are listed, it's liquidity, which makes things easier. But because it's so early on, if you as an investor go in and invest in a REIT, and assuming you want liquidity in a few months, will these REITs be able to provide that liquidity, right? So because early on, things are going to be tough. So net, step in the right direction. As an investor, returns not very exciting unless the India landscape changes and rental yields go up to 5-6%. Commercial REITs are still far more attractive because you're looking at a 9 to 10% yield in that market. So good news, I guess, more for real estate companies as opposed to investors.
I guess, but to the point on fractional ownership, and this is the last point I will make, maybe you can counter that, is that for so long we've talked about real estate as a part of your investment portfolio and how, because of the chunky size of the assets, you can't really count your residential, your home, you can't count it as part of your assets. But if you have a 1 CR portfolio and you're saying, okay, 10% allocation towards real estate, it's possible.
Indeed, it is possible, but I'd still pick a commercial REIT over a residential REIT at 9% and capital appreciation. And more importantly, while Alex indicated 1 crore, let's not forget 1 crore in India is categorized as an HNI.
Absolutely.
So if this is for retail investors looking at getting a piece of the pie, you might want to take a step back. That's not really what's going to happen. But like we said, the industry is giving this a thumbs up.
That's a very fair point. All right, let us know what you think. Would you consider fractional ownership? Do you think that it's affordable? Do you think that the value of 10 lakhs should be brought down? All of that on our social media platforms in the comment section. We'll be back on the other side with more action before the start of trade, so do stay tuned.
Welcome back. You're watching India Market Open. Quick look at the implied open before we come to what you can expect on the F&O side of things. And yeah, we're still looking like we're headed for a positive start. Focus on banks, financials, and of course Tata Group stocks. But Samina is now joining in with what to expect on the F&O side of things after a long weekend. Samina, the outlook overall positive?
Indeed. It's been 4 straight week of gains, and that's what we saw on Thursday before we went in for the long weekend. The Nifty closed at a record high, just shy of 22,500. And of course, this morning you're opening to an implied Nifty figure, which is indicating to a massive gap up of about 100 odd points. The Nifty 50 premium also stands at 44 points. It's actually improved from the close that we saw in terms of Thursday. Open interest is around 6.5% versus 5.5% that was seen in terms of Thursday's trade. Well, a quick check of what the action really looks like. Remember, for this week, you're going to see 22,600 or 22,800, which will act as a key level of resistance for the Nifty. On the downside, support remains at 22,300 and 22,400. Well, let's take a look at all the activity. Maximum open interest call addition was seen at 22,500, followed by 22,800 and 23,000. So that indicates to you what sort of activity we are seeing on the call side in terms of maximum open interest being added. On the put side, maximum open interest addition was seen at levels of 22,400. But that's Bank Nifty for you after 2 months of underperformance. Remember, Bank Nifty made a record high all the way back in December, and since then there's been some resistance to go back and make new record highs. Bank Nifty closed out in terms of trade, and futures are indicating to a large premium of about 65 odd points, and open interest is down about 10% versus 11.1% that we'd seen earlier. Well, that's pretty much where the action is in terms of stock-specific trade. There are lots of counters that will be in focus. More importantly, what you want to watch out for is counters such as Mahanagar Gas, ICICI Bank, Manappuram Finance, Tata Chemical, Dixon Technologies, where we've seen a decline in open interest indicating to some sort of long unwinding. In terms of short built-up counters such as SAIL, Apollo Tyres, M&M, Manappuram Finance, AB Capital and BHEL have been fairly active. So what we're setting ourselves up for is another positive session. It's been 4 straight weeks of gains. It remains a buy on dip strategy. But what you want to keep in mind is because we've gained for the last 4 trading weeks, today or this week could be a week of consolidation and minor profit taking. But we have with us Amit Goel now, who's joining in with his top strategies for trade. Amit, good morning. Thanks for joining in. Amit, from what we are picking up in the F&O activity and the sort of technicals this morning, 22,600 to 22,800 is going to be important resistance for the Nifty, and support remains at 22,400. How would you trade the Nifty to begin with?
Yeah, hi, good morning, Samina, and good morning to all your viewers. Thank you for having me here. As you've very rightly said, Nifty has been on a tearaway run. We've had 4 consecutive weeks of positive closes, and we have been printing new all-time highs every week. Right now, what I say is, I tend to agree with you that, excuse me, I tend to agree with you that we will possibly see a bit of profit booking from some of the weak counters, especially given the news flow, which has not been very positive, at least in the NBFC side. Even the overhang of Tata Sons, listing, causing some bit of negativity in the Tata Group, could possibly pull down the Nifty as well. So what I would like to do is I would like to play the range in Nifty, keeping a broad range of 22,400 and 22,800, and set up a simple short triangle or an iron condor.
Right. Amit, we'll talk about Tata Chemicals and some of the other Tata Group stocks because, like you said, these are going to be fairly impactful today, at least in terms of what the Nifty does. But very quickly on Bank Nifty, the last time it hit or made a record high was all the way back in December. Any trade on Bank Nifty this morning?
Bank Nifty has been, not really participating in this rally, so to speak, especially because the biggest, what I would call the captain of Bank Nifty, which is HDFC Bank, having a large exposure in Bank Nifty, has not been performing. That is the reason why I feel that Bank Nifty, in spite of SBI Bank, ICICI Bank and others performing well, has not really been able to print new highs. I don't see that trend changing anytime soon. I don't see HDFC Bank picking up pace anytime soon because of the overhang in terms of the fundamentals. So I still feel that even Bank Nifty also might possibly trade in a range though the trend and the bias remains on the upside. So even in Bank Nifty, I feel, especially with this NBFC news flow, curbs from RBI on various NBFCs, including IIFL, JM Financial, and others, possibly could have a negative sentimental impact on the financials. Given that, I don't see a tearaway gap up in Bank Nifty, and so I would still, again, both the indexes, I would like to play a range. In Bank Nifty, the range would possibly be 47,500 and 48,500. Same short strangle or an iron condor in this as well.
And Amit, I believe you've got a trade on PVR Inox. The stock's largely been an underperformer, but did a pretty smart pullback in terms of Thursday's trade. Gaining about 3% odd. Way forward, what is the strategy on PVR Inox? Sorry, Amit, I guess you...
I guess I have a little bit of sore throat. But anyways, continuing with PVR Inox, I'm trying to steer away from all the news and the momentum news flows, which is happening in the financials, in the Tata groups, and I'm trying to look at a counter which has not been really, which is kind of out of the favor. It is kind of out of the view of the broader market, but has been silently forming a base. If you look at the weekly and the monthly chart, we have formed a double bottom type of a base at the support levels in PVR Inox, and the kind of move it has been giving in the last 2 weeks makes me believe that we might head up in this counter. So I feel that the target on PVR Inox is around 1569, 1570 odd levels, and I would enter at about the current market price, giving a stop loss of 1354. This is the cash market strategy. But if I were to play this in the options market, I would set up a bull put spread, selling the 1400 put and buying the 1360 as an offset, giving me a net profit or a max theoretical profit of 5,500 odd levels, and keeping a stop loss at 1388 levels, which is on an hourly closing basis. If the price closes below 1388 on an hourly closing basis, I would probably make a loss of about 1600 rupees, which is a fair bit of loss, and I would get out of this counter. This gives me a 3.5:1 kind of a RR. So this is the trade that I would play.
Thank you, Amit. Thank you for taking out the time to join us. You do have a pretty bad cough. Hope you feel better soon, and we will catch up with you soon. Well, that's what it looks like, Tamanna. It's going to be a trading bias with an upward bias, but the range remains 22,400 to 22,800. No major outperformance expected on Bank Nifty, and Amit, of course, had a strategic long call on PVR Inox.
Yeah, Amit, take care, and take care of that sore throat especially, and I hope you have a great day. Now, a lot of stocks in focus today, and I'm going across to Anushi now, who is joining us with more companies that have had news flow over the last 3 days and should be on your radar. Yes, Anushi, what's on your list?
Hey, morning, Tamanna. So, a whole list over here, starting off with DB Realty, which is in focus ahead of its 1,500 crore QIP. Now, this includes about 1,000 crore of QIP with an additional green shoe option of about 500 crores at an indicative price of about 258. So, if you have to look at last closing price, about a 8.5% of discount over here. Now, these proceeds are to be used for the company's debt repayment and to kickstart off certain of their projects. So, focus remains on this one. Next on the list is Dilip Buildcon, which has emerged as the lowest bidder by NHAI in Tamil Nadu for a 550 crore road project over here. For the same for this, the completion period is estimated to be within 36 months. Moving on to PNC Infratech, again, this is also in similar guidelines over here, in which they have executed an agreement for MP Road Development Corporation for about 1,174 crore. But apart from that, the company has also executed another 1,062 crore of contract construction for UP. So again, PNC Infratech remains on focus. Next on the list is Torrent Power, which has received a letter of award for about 1,540 crore. This is for the Maharashtra State Electrician Distribution Company, and in line with their capacity to increase the renewable capacity to about 3 gigawatts from the current positioning of about 1.7 gigawatts. And last on the list, we have HAL, wherein government has approved the acquisition of 34 new Dhruv choppers, which are to be manufactured by Hindustan Aeronautics. Of this, 9 choppers would be used for the Indian Coast Guard, and the remaining for the Indian Army. Again, this is the decision remaining in line to boost the company's domestic production related to the same and replace the old choppers. So these are the whole list of stocks that definitely should be in focus today.
Cool. All right, thank you so much for that, Anushi. Another set of companies that will be in focus today, and one stock in particular is Tata Chemicals, because of the kind of news flow that we have seen all through the last week. The 4 trading sessions of last week saw the Tata Chemicals stock up nearly 34%. You're seeing just the chart for Thursday, but if you pull up the weekly chart, you'll see the kind of run-up that we've seen. Now, a lot of flip-flop on whether they could list, Tata Sons could list, could not list. Before we get to our expert, I want to get Sajit Mangat, my colleague, in to just get some perspective. Now, Sajit, this is a 2022 RBI decision which has said that if you're a CIC of a certain level, you now get classified as an upper level NBFC. Basically, if you're a holding company of the size of the Tatas or Tata Sons, which is the mothership, so to speak, of all their group companies, you need to now list because you're classified as an upper NBFC. This is known for a while. What happened in the last week?
So let's put a context to it, basically, right? We used to have too big to fail kind of banks, which RBI has already classified. Over the last couple of years, there have been cases of NBFCs failing, and they want to ensure that there is no systemic risk to that, so they classified it based on the scale
this is the IL&FS fallout?
It's the IL&FS fallout which happened, and they have now classified NBFCs based on scale-based regulation, which means that how big is your scale in terms of how much of leverage you have on your balance sheet, whether it's off balance sheet or on balance sheet, and you based on that you classify into base level, medium level, and the upper layer. And then there's a top level. There's no one in the top level as of today, but there are around 16 NBFCs which fall under the upper layer, in which 2 of the Tata Group companies are falling. Which one is Tata Sons Private Limited. Remember, it's a private limited company, which is the holding company for the group. And then there's Tata Capital Financial Limited, which is the financial services company of in the Tata Group. Now, within the Tata Group, if you look at how this financials have been broken down, so Tata Sons is now the holding company or the promoter for the insurance companies. Tata Sons, along with Tata Investment Corp, is a co-sponsor for Tata Mutual Fund. And Tata Capital is doing the lending business, cards business, wealth management and others, which is happening. So there are 3 entities which are there. One is already listed, Tata Investment Corp. And you remember Tata Investment Corp is also running up every day around 5% for the last couple of weeks, if you look at that.
That's because of the semiconductor play or for whatever reason?
They're not into semiconductors. They're very clarified. It's coming under Tata Sons, which is there. The point being is that now it seems that because of that regulation, within 3 years you have to list, and your disclosure norms will be as good as the listed company disclosure norms, even if you are not listed. So that's what the RBI regulation very clearly says. Now, by September 2025, if you are not listed, you have to list. Now, that's where the report comes in and says that, okay, within the next 1.5 years, Tata Sons has to list, and there's a valuation which they have been putting in, and then there is companies who are holding stake in Tata Sons, which includes Indian Hotels, Tata Chemicals. They're also running up. Tata Chemicals running nearly 40%. Not on the back of ash.
We saw this Spark report, which saw Tata Chemicals run up. My question is that over the weekend you had a reversal of that view with a couple of newspaper reports saying that they're going to look for other alternatives. Before we get to Mahantesh Sabarad, who's waiting by, I just want to briefly understand from you, Sajit, that if the Tata Group does not want to list Tata Sons, they do have those options as well.
That's right. So they have to do a financial restructuring of the Tata Sons, wherein all the financials will have to move to one of the entities. or two entities which they have. They have an NBFC and they have Tata Capital, and then they have to work out a way where the leverage is brought down in Tata Sons to a certain extent that it does not have to do that. But as rules stands currently, they have to go and list by September 25, and it seems that the RBI will not give anything unless the classification of Tata Sons changes from a CIC to a normal company, which is happening. So there is a lot of these negotiations or discussions happening within Tata Sons on this issue now that this has been blown up after the report. That there will be some kind of restructuring in a way that Tata Sons does not. Remember, Tata Sons moved from a public limited company to a private limited company after the mystery fight which happened, and they don't want to list in any ways, and it's held majorly by the trust, and they don't want to list it because the whole concept of philanthropy coming in from Tata Sons to through the Tata Trust will be lost the moment it becomes a private limited company or a listed company with profit as one of the motives which coming in, right? So that is something which is there, and I don't know how they're going to manage the jugglery part of it, but they're never interested in listing Tata Sons.
But they have significantly reduced their debt as well in the last 9 months. And while I know we talked about how Spark sparked this rally for these counters, and please correct me if I'm wrong, Sujitya, but there was also a report earlier by Kotak Securities that had said that Tata Group was considering selling 5% stake in Tata Sons through an IPO. So while Spark led this rally, there were also reports by other brokerages indicating similar sort of
See, the 5% number is not a new number. If your valuation is more than 1 lakh crores, you can come out with an IPO of minimum 5%.
So they can even do just that, right?
Look at LIC, right? They came with 3.5%. Right? Because it was more than 1 lakh crore valuation. But the point is that whether you intend to list or not, the intent is not there to list.
Then they've been very clear about it. This was sparked by Spark, and now it's been unsparked by a media report.
And they have to now...
I don't know now if it's sparked or unsparked. I want to get Mahantesh in. He's also joining us in this conversation. Mahantesh, very good morning, and absolutely fabulous to speak with you on NDTV Profit. I want you to weigh in on this whole situation because, A, the fact that Tata Sons, as per the current rules, will have to list by September 2025 was known for a while. What we saw simply last week was a calculation that if they list, which of the listed entities will benefit the most, and which is why the Tata Chemicals play came into place. What do you think the impact will be of what we've seen over the weekend? Source-based reports, remember nothing official from the company, source-based reports saying that they're looking for options to avoid listing, including juggling or rejigging the balance sheet.
Good morning, Tamanna. So firstly, my first take is that all this is speculative. You did mention that a lot of this was already known. The CIC norms were put into place in 2016. Actually, they originated in 2011. 2016, there were major changes, and over a period of time, the CIC norms have been changing. Having said that, you should understand that the CIC norms have a set of conditions, one of which is that the CIC company should be accessing public funds. It is very simple for Tata Sons to really stop accessing public funds a year and after to just go out of the radar of the CIC. There are other conditions as well. The investment company should be holding more than 60% of equity in its group companies. Again, it is very easy for Tata Sons to drop off that radar of 60% bar. While there is another condition which says 90% overall investments, which include debt, not just equity, but debt instruments as well, to make it 90%. So there are various conditions which the CIC norms have to be met with for a company to be called CIC. And then there is still another escape route available through the RBI norms, which says if you have just insufficient conditions that satisfy the RBI, you can be called as an unregistered CIC. So all this is available, all this is known, all these escape routes and all these norms kind of escape routes are available to the Tata Group per se. I don't know why the speculation has suddenly begun.
So what do you do today, Mahantesh? Key question. People who have maybe bought into Tata Chemicals, Rallis, the whole pack actually saw quite a jump up, Tata Investments, all of those group stocks. Do you think that the outlook will now turn negative short term? Fundamentally, what do you make of these as investment plays?
And so it is very simple. If the stocks run up, what does a typical fund manager do? He starts booking profit, right? He starts reassessing the portfolio weights that he has. A short-term rally in stocks that a portfolio manager would have held would lead to weightages going up for those companies. So naturally, there is a process that will come into place, which will, from a risk management perspective, which will say that you should reduce the portfolios. I think that is what is likely to happen with most of these companies. And speculation is something which we have seen time and again in a efficient market. Speculation doesn't last too long. It corrects itself quite sharply.
Hi, it's Samina joining in as well, and we've talked about how this Spark report to its private wealth clients sparked this rally in stocks like Tata Chemicals, went to record highs despite falling soda ash prices. But I want to do a little bit of a detour and talk to you about what's happening in Tata Investments. We've tried talking to multiple people, unable to make sense of what is justifying or explaining the rally that Tata Investments has been witnessing. Let's not forget that this is a holding company which is rare and trades at a premium, unlike other holding companies that should be trading at a discount. But a 5% circuit every single day. What does an investor do? What does an advisor tell his investors to do?
So it is very simple. Again, the liquidity in the stock is very tight, and therefore when you corner a set of investors start cornering the stocks, it will rally, and it will continue to rally for quite some time until there is some selling pressure that comes in over a period of, and that selling pressure has to come from the same persons who have actually cornered the stock. There is nothing really that is happening with Tata Investment Corporation apart from the fact that they have plans to invest in the growth capital of a set of group companies. Whenever there is growth capital getting infused, both the companies, the investee as well as the investor company, stand to gain in terms of valuation, which is like the present value of future flows that you are likely to get. The assessment done by different sets of analysts would vary, but then when such assessment becomes a little irrational, you will not see the rally, holding on for too long. I believe that something similar is happening here. There is a lot of investments being planned ahead by the Tata Group company. Particularly look at the way the airlines is being targeted by the Tata Group company in terms of growth and consolidation. Probably Tata Investment Corporation would have a role in that ahead. And you also have the digital side of the business of the Tatas growing appreciably well. Particularly the consumer-facing one. These businesses require a little bit of growth capital, and I believe Tata Investment Corporation is the one that is likely to provide that ahead.
Mahantesh, so very quickly, if you're an investor with moderate risk profile who already has gone out and bought Tata Investments, the stock is up 300% in the last 6 months, would you recommend selling the stock?
So, it's risk profile to risk profile, right?
Yeah, so that's why I said moderate risk profile.
If you are holding a single stock, obviously it means book profits, right? Okay. But if you're not holding a single stock, most likely Tata Investment Corp doesn't exist in many portfolios, and even if it does, it would have existed with a very small fractional holding kind of thing. It's better to trim the holding.
Okay. Thank you so much, Mahantesh, for joining us today. You may see quite a move in Tata Chemicals and other Tata Group stocks today. But remember, fundamentally, nothing changed a week ago. Nothing changes today. As per the rules of this moment, they still have to list by, September, October 2025. So that hasn't changed. We don't know officially from the company if they have a way of avoiding this completely. So keep that in mind. Sudeep Shah joins us now. He is Deputy VP Head Tech and Derivative Research at SBICAP Securities. Sudeep, very good morning to you. And I'll come to you, of course, on Tata Chemicals and what you should do there. Let's begin with that.
Good morning. Absolutely. It's the talk of the town now, Tata Chem, Tata Investment, and all these 3-4 Tata names. Now, but I would just like to, before we speak about what to do in these stocks, let us understand what has happened with the Tata stocks in the last 4 or 5 sessions. It's especially Tata Investment and it's Tata Chemicals. The rest, if you say TCS, Tata Motors, or Tata Consumers, all these stocks were in a decent uptrend, and with or without this news, all these stocks, Tata Motors and everyone was decently placed. Now, this IPO news is only, I feel, affecting 2 or 3 companies such as Tata Chem, Rallis, or Tata Investment for that matter. And to just take Tata Chemicals first. Now, what has happened in Tata Chemicals is like in the last few months, we had seen Tata Chem making a lower top, lower bottom. The stock was either in a range between, say, 1150 on the upside and 900, 880 on the downside. Since last, I guess it's from September, October 2022, it has been trading in this range, and a lot of short positions was built. So with this news, when this has come, maybe in the first week of March, on the 3rd or 4th of March, so that has led to sharp short coverings. Apart from the valuations game in Tata Chemicals with respect to the Tata Group IPO, it is the short positions which have got squeezed, I feel, and this has led to a big rally here. So I feel with the news that has come in the weekend, we might see some cool off in Tata Chemicals. But overall now, with the range being broken on the upside, I feel levels of 1220, 1230 will now act as crucial supports, because these are the previous swing highs which have been taken out by a huge volume. So I feel 1220 on the downside for Tata Chemicals will act as a strong support. And regarding Tata Investments, now nothing's fundamentally changed in the company or on the results front. It's just that the IPO news has made this talk of the town. And from the current levels, if you see, it's November 2023, the stock was in around 4,000, 4,050 levels. It's almost double in less than 3.5 months. And this has never happened in the history of Tata Investment Corporation, such bigger gains in such a small time. So I feel this stock could now cool off, and fresh buys are not warranted at this level, even if the stock hits a couple of lower circuits or goes down till 8,000, 8,500 levels. I feel one should avoid Tata Investment Corporation and look for stocks such as Titan, Tata Steel, TCS, Tata Motors, which are doing predominantly well, irrespective of this news.
Right, so even if it hits a couple of lower circuits, don't buy right now. 1220 is the support Sudeep sees. Sudeep, we need to come back, get your picks, and of course levels for the Nifty, Bank Nifty, but that's after a very short break. Stay tuned.
Welcome back. You're watching India Market Open. Implied Nifty indicating to a pretty solid start this morning. A 100-point gap up cannot be ruled out in the first few minutes of trade. Of course, remember the week will be one of consolidation. Minor profit taking after 4 straight week of gains coming in for the index. Sudeep, before we go into pre-open trade, you want to take our viewers through your top trade recommendations this morning? Sudeep, I can't hear you.
Yeah, sorry. So the first trade that I have is on Larsen and Toubro. See, while the markets have been moving steadily in the last week, we have seen large caps outperforming. So Larsen and Toubro, L&T was in an uptrend. Post that, in the month of February, we have seen some consolidation, profit booking, and once again the stock is now back above its 10 and 20-day exponential moving average, and the daily, weekly, and the monthly chart setups are quite strong now. So I feel from the current levels, L&T can be bought with 36.20 as a stop loss and 3800, 3830 as targets. Now, the second stock that I have is PNB. In the last 1 week, we have seen PSU banks once again outperforming, and the indices have crossed and sustained above its February month's swing highs. So overall, I feel there could still be a decent bit of action in PSU stocks, and PNB from the current levels is well placed to capitalize that move. In an uptrend on all the time frame charts, and even from a shorter term perspective, the stock has sustained above its important key support zones around 124, 125. So this can be bought with a 125 stop loss and a target of 138 and 142 on the upside.
Do you have a trade on Nifty and Bank Nifty this morning at all?
I feel, post this gap up opening, indices could consolidate, specifically if we say Nifty, it could consolidate between 22,400, 430 on the downside and 22,600, 630 on the upside. So it would be more of a consolidation day initially, and more strength I feel would be there in the Bank Nifty, because this index is specifically outperforming Nifty 500 by a margin. Now, if you see it on a ratio chart, it's creating higher highs on that relative strength chart. So I feel Bank Nifty could still outperform, and Nifty could consolidate post the gap up opening.
Right. It looks like it's a flat start. The Nifty is higher by 76 points, actually. Pardon me, not a flat start. So it's not looking too bad in terms of pre-open trade. Slightly lower than what the implied Nifty was indicating too. A quick check on Tata Chemicals in pre-open trade and JM Financial before we move on and continue our conversation with Sudeep. 10% cut in pre-open trade. Now, that's not looking good, but I don't think that's how it's going to play out this morning, or not that severe, at least, the pain. JM Financial down 8%, not looking as bad as Tata Chemicals, which really has no negative news flow in that sense. So it was, the stock, of course, ran up on reports by Spark, and now on back of other reports that an IPO may not be likely for Tata Sons. The stock is correcting 10%. Let's not forget, in both those scenarios, the IPO was not expected for the next 18 months. So bulls were really just getting ahead of themselves on that counter. If I can get Tata Motors and Tata Investments as well, I think Tata Investments also might take a bit of a break this morning. And it is finally, after weeks and weeks of outperformance and hitting upper circuit, this is the first day in nearly 2 months that Tata Investments is seeing a gap down of 5% in trade. Tata Motors is looking flat. You've also got a few other names like JM Financial that are seeing a cut of 7%. The circuit, remember, has been revised on JM Financial to 10%. So that could explain why you will see a losses being capped on the counter. Tamanna, it's harsh, 10% on Tata Chemicals. I mean, in their defense, they never said that they were going with an IPO, never did they deny it or contain it. The stock went up on expectations, and the stock is now declining again on speculation.
So ideally, there should have been a statement, on the back of all of this, that whether there were plans or not. And I think the expectation also from the Tata Group, largely that if you need to come up with an IPO, which means more scrutiny, you will not run away from it. I just want to mark out Torrent Power. So they've got an LOA from the Maharashtra government. That's up this morning. It's an LOA worth 1540 crores from the State Electricity Board. Torrent Power is having a pretty decent morning. Let's pull up M&M as well. There's a positive HSBC note, but not too much action, at least in pre-open. So as the pre-open rates settle, I just want to go across very quickly to Mahima to speak about a key brokerage note on the insurance space. Then we'll come back and ask Sudeep his view on it. So insurance numbers were out for the last month, and Jefferies as well as Citi have given its thumbs up to the Indian insurance space. Mahima, what are those notes saying?
Right, Tamanna. So, talking about Citi on India Insurance, well, SBI Life remains their top pick. They've said that tepid growth in terms of ticket size has been observed and single premium mix is down YOY. Well, they've also said that Q4 FY24 estimates APE, in terms of APE, have remained benign and expects medium-term re-rating underpinned by tailwinds. These tailwinds can be in the form of pension landscape, channel diversification and product innovation. And they've said that strong growth in individual regular pay policies have been observed. Now coming to individual stocks, HDFC Life, where HDFC Life's individual AP growth surpassed that of the private peers after 4 months now, and performance of non-HDFC bank channels relative to private industry will be a crucial monitorable. Then moving on to ICICI Prudential Life, well, individual AP market share were flat YTD. Trends in premium mix, channel-wise sourcing strategy and cost ratio will remain the key monitorable in this. For Max Life, they've said that Max Life has outperformed its peers. However, if we see the overall 4-year on CAGR basis, the individual APE growth was at 12% versus that of 16% of peers. And for SBI Life remains again their top pick, and SBI Life continued to witness market share accretion. And lastly, LIC, where LIC continued to recoup market share in group business. So this is what Citi has to say about the insurance business.
For that, Mahima, Sudeep Shah with us. I'm also joined now by Deven Choksey of DRChoksey Investments. Very good morning to you, Deven Bhai, as well. Let me come to Sudeep very quickly on some of the insurance picks, and we're going to be expecting a movement over there. And SBI Life, maybe you don't want to talk about specifically, but ICICI Pru, LIC, anything that you like there, Sudeep? What would be your play here?
Yes, so out of all these names, HDFC Life is a bottom reversal pick. It's not that trending on the upside, but I like ICICI Pru, which has done really well in the last several sessions. It has even given a decent breakout of the falling trend line that it has started since July 2023. So it's a breakout there on the short to medium term charts from a ICICI Pru perspective. So that stock looks good with 565 as a support, and on the upside, I guess the stock could go all the way up to 625, 630. LIC is rebounding from a key support. Now, let's not forget there was a big rally in LIC in the prior few months. So it has just retraced a bit. The overall long-term charts are still bullish. So post that bullish move, there has been a retest. And I feel with this news, 1000 zone 995 could act as a strong support, and we could see the resumption of a rally in LIC. And this also could be bought with a 990 stop loss on the downside, and on the upside, 1100, 1150 levels look likely.
Deven, good morning, it's Samina. Deven, we would have started with the markets on any other day, but this morning, I think it's all about Tata Sons, or rather has been all weekend. Yeah. First, that report sparked by Spark to its private banking clients, how Tata Chemicals was a good way to play the Tata Sons IPO. And then, of course, news reports on the weekend, which said that Tata Sons is considering other ways than an IPO to, of course, fulfill the regulators' requirements. Tata Chemicals on back of that gained 40%. The stock in pre-open is down 10%. I mean, this is a classic case of how retail investors get stuck in counters without much know-how. I mean, Tata Chemicals is struggling with falling soda ash prices. If it wasn't for Tata Sons as a trigger, this stock would have probably declined 10% as opposed to gone up 40% before the decline.
Yes, Samina, good morning. And you are spot on, actually. The soda ash, the glut has happened, I think, because of the China dumping. And to a greater extent, I think the expectation is that I think the stock's getting cleared sooner than later. But that is still far away. So maybe if you are counting next 4 quarters on the fundamental side, maybe I think we could be seeing some amount of stock clearance happening on the imported side at this point of time. And maybe next quarter onwards, our domestic companies would start stabilizing on production as well as on supply. So you're absolutely right. I think the fundamentals are still catching up. I think they have not yet done any change out there. Unfortunately, I think the stocks have seen, I think, a very sharp decline in previous quarters. Now, I think with this news coming in, probably I think the expectations have started increasing. Also because of the fact that Tata Chemical is per se holding the other Tata Group companies in their portfolios. So to a greater extent, I think the valuation unlocking could mean that I think some better numbers coming also even in the balance sheet of Tata Chemicals. So this is a guesswork. As I see it, I think neither I would have calculations ready on this particular subject because there is no clarity. But that's where I think the market is a little bit more, I think, gung-ho about. Should this unlocking take place, I think the market believes that I think the valuations would probably start getting re-rated. I would be the person who would rather like to look at the event to unfold and then possibly, I think, look at the possibilities of creating the valuation unlocking. Till that point of time, I think one should stay put on, or one should not, I think, get into the crazy rush of buying the stocks in the portfolio. Yeah, eventually some good companies in the Tata groups, they will perform well, but I think not on this news. I think that one should buy into the portfolio.
Right, yeah. So, okay, that's the Tata Chemical story. It is off the day's low point, at least in pre-open trade, but Tata Investments as well. Deven, do you have any idea what's happening on this one? It's up 90% this month. It's the first morning when you're seeing a little bit of a gap down and an opportunity for investors to get in, if that. Would you recommend it?
Again, I think not sure about the calculations, the valuations, and I think on the low liquidity, the stock price has gone up. So one will remain a little mindful about, I think, all the possibilities. I would buy with clarity. That is fundamentally very important to me. So I think one would really wait for the clarity to emerge on the decisions taken by the Tata Group. And that's where probably I think one will have to wait before buying into the portfolio.
The other set of companies that we should look at this morning and as pre-open rates have settled down is your healthcare space. You're seeing Max looking pretty good. Max Health, Oro Pharma, Alembic, Torrent Pharma, Abbott as well. Deven, are we seeing a bit of a defensive play today? Because once pre-open rates have settled as well, you're seeing the same sort of range-bound trade that we may see all day today.
So as I understand, Tamanna, I think the market is trying to play the rotations, the sector rotations, the stock rotations. If I think many of the frontline pharma companies have achieved the price goal, which otherwise up till now they have been struggling with. So in recent months, I think these frontline pharma companies have actually achieved the appreciation which they were supposed to get it, I think, for the full year. I believe that I think there's some amount of profit booking taking place, and I think the mid-sized pharma companies are attracting that money into it. So our markets currently are driven significantly by the liquidity movement. Entry and exit also depends significantly on entry and exit points. So in my viewpoint, I think neither the mid-sized pharma companies or for that matter frontline pharma companies are doing anything which is exceptionally different than what they've been doing in up till now. So to a greater extent, I think fundamental story remains intact. But whether I think this price action justifies, I could think that it is largely because of the shifting of the funds from one end to another end, for which I think they are getting the tailwind. And I think the stock price is around rally at this point of time, more technical in nature than anything to do fundamentally in nature as far as I think the outlook is concerned in the business.
Sudeep, very quickly, 2 minutes, two stocks, NLC and Rail Vikas Nigam, both are expected to see a pretty solid gap up. If we do get a gap up, would they make good trades for the day, you think? Do you think there would be buying opportunity despite a gap up on both those counters?
Just we'll take both the stocks one by one now. Looking at NLC's chart, that is much better placed than RVNL, and if you see NLC, it has taken support at a very important level around 222 to 23 levels, and it's now crossing above all its short-term moving averages. So I feel from a chart standpoint, NLC looks better placed, and till 237 holds, we feel that the stock could move up to 255 on the upside. The second stock, RVNL, it's at its important support even if it gaps up around 260, 262, I feel it should cross 268 for a big move up to 300 levels. So till the time this does not cross 268 to 69, there were several instances where it had taken resistance at this zone. So I feel 270 to 68 zone is very critical for the stock to cross for the resumption of the up move that we had seen in the last December.
Right, that's the call coming. RVNL and NLC are going to be two stocks you want to track in early minutes of trade. It's expected to be a positive start, more or less an expected line, so no surprises there in terms of the kind of opening that the street is going to see. 22,500 is the kind of range you would see in terms of today's trade. Well, stock-specific action will drive the street. Rotational buying is what would keep activity up and alive in terms of the Nifty movement. Not too much expected action from the benchmark itself. It's going to be stock-specific trade in the broader markets that will be keeping up traders' activity in today's session. But a quick check on how we've opened up. We are reacting to bunched up cues from global markets as well. And it's actually not half as good as what implied Nifty was indicating too. We were expected to see a gap up of 100 points, but this is actually a downside bias in terms of trade. So like I said, there was an expectation that consolidation and profit booking cannot be ruled out. And that's really what's happened first thing this Monday morning. The Nifty itself is lower. Bank Nifty is trading once again much lower, 150 points, underperforming the benchmark in a big way. Broader markets, interestingly, are doing better than the benchmark. This is a corollary from what we saw in terms of last week's trade, with the mid-cap and the small-cap index was seeing some pressure. Small-cap index, after a 3% fall last week, is up marginally this morning. The mid-cap index also not doing too badly in trade, but the Sensex and the Nifty both trading slightly lower. Like I said, a morning of consolidation is what we've had in terms of trade. The breadth of the market's not too bad, so that is a little bit of heart that bulls will be taking from. Let's not forget the Tata Group counters are the ones that are putting pressure or would be putting pressure on the index as well. Well, the top losers this morning is Tata Motors. Remember, they also own about 1 to 2% stake in Tata Sons. Tata Steel is well trading lower. Metals generally are seeing a weak morning. You've got Power Grid and BPCL seeing some sort of correction. Indusin, Tech Mahindra, LTIM are some of your losers. On the gaining side, SBI Life, so insurance is looking like a good play this morning. SBI Life is up 1.5%. Hero MotoCorp is looking good. Ultratech, Bajaj Twins, UPL are trading higher. No real trend, no real triggers in terms of what you're seeing on the Nifty 50 at least. So no stock-specific news is driving some of these counters, apart from insurance and Tata Group companies that are reacting to news flow. But apart from that, Tamanna, surprisingly, it's very, very somber this morning, contrary to what we saw in implied Nifty or were expecting, at least in the first few hours of trade this morning.
Absolutely. But think about it. There is so much of, trepidation and uncertainty on so many stocks. You have a negative Bernstein note on SBI. You have no real clarity on what's happening with financials, what the spillover impact of JM Financial is, and maybe all of that also playing out to some of that nervousness. But let's look at Tata Chemical, Tata Investment and Rallis to start off with and see what's happening there. Yes, down on all of them. We also saw that on the Nifty with Tata Steel, Tata Motors. So you're seeing the Tata Group in focus over here. And this is essentially, now that there are reports, remember no official statement from the company yet, that they will look at ways to avoid listing by 2025 September, by the way. Anyway, this was a long shot. JM Financial is one that we should look at this morning. A fresh whammy. This time from SEBI on NCDs, and what they have talked about is very serious. If you go through that SEBI note where JM Financial was funding people to invest in NCDs and then buying on the other hand through their brokerage arm. So that seems to be a problem. That stock 8% down again. M&M is one we should look at. HSBC has maintained a buy with a target price of 2,300. Mildly positive there. Nothing too exciting. We'll pull up the insurance pack, and we saw SBI Life doing well on the Nifty. The Feb figures are good. There's a Citi note out as well. 2% up on LIC. ICICI Pru is up about 4% up. But we should look at others. SBI Life and HDFC Life also doing quite okay when it comes to the insurance play. I'll quickly just pull up Z Entertainment, and we didn't quite cover this in our trade setup, but it is a newsmaker. There's a management rejig. Rahul Johri is out. The investment officer now reports directly to Puneet Goenka. So they're trying to make some changes there to shore up investor confidence. Let's talk up 1.5%. Torrent Power is the other one. 1,500 crore LOA from the Maharashtra government. In fact, the state power unit. And that stock up 3.5%. So no massive moves. Stock-specific news perhaps, but the Tata Group companies continue to be the flavor this morning, Samina.
For all the wrong reasons, Tamanna, though, unfortunately, those counters are getting hit pretty badly. The Nifty also at 22,499, 22,500. It seems like it could be a morning where we've started off quiet, but see some buying that emerges as we go into the second half of trade. Tamanna's highlighted pretty much all the counters in focus, but I'm just going to add a few to that list. I'm not sure if those were covered, but NLC on back of an order win, Rail Vikas Nigam that was already mentioned, Interglobe Aviation on back of the promoter reducing its stake in the company is seeing some pressure. The stock is down 2.5% to 3% each. You've got stocks like Lemon Tree, despite the fact that they are on an expansion spree, the counter is trading weak. HAL, I want to pull that one up. They had a big order win last week, and the stock has gained really well. It's up 11% in the last 5 odd trading days. This morning as well, a 2.5% up move coming in on that. ICICI proof on the broader markets is looking good, 3.5% there. You've got Suzlon Energy seeing a pretty good gain of 3.5% there too. You've also got a few other counters that are moving in terms of today's trades. If I can pull up Suzlon, like I said, 3.5% gain on Suzlon is what we have. To add to that list, you've got Alok Industries, it's up 5%. Macro Tech, remember they concluded their QIP last week. The stock seeing a big move this morning, 6.5% on that one. Paytm is up 2.5% as well. Z, while we're at it, there's been some management rejig at Z. Interesting to see how the counter is doing, 1.5% high. But the morning definitely belongs to insurance companies. The likes of GIC also looking good. Ethos up 4.5%. The Nifty, though, Tamanna, is somber. It is sulking despite the fact that there are a few gainers because the losers clearly are taking all our attention this morning.
So technically, it opened and hit a new high. It's I would say, not very pacey, but not exactly sulking. Very muted. Flat with a negative bias at the most. So, yeah, this is a kind of morning for perhaps consolidation as well. Let's get quick views from Sudeep and Deven on what the opening has looked like. Sudeep, anything exciting that you've spotted since we've opened? I'm seeing real estate stocks are doing not too badly right now. Macro Tech up about 6.5–7%. Again, a fundraise over there, which could be driving the counter.
Yeah, so looking at the real estate stocks, DLF, Macrotech, both these stocks are right now breaking out on the upside. DLF also looks good for 960, 970 on the upside, and Macrotech also has broken all its important resistances. And I feel from the current level, that stock also could do well and go up to the levels of 1300, 1320. I feel if someone is making a fresh entry here, then should keep a stop loss of 1220 on the downside for Macrotech.
Any top picks for the day, Sudeep, looking at how, the charts have opened? And is there anything that you would touch in the Tata Group pack right now? Because it's not just Tata Chem, of course, 10% down now as we speak. Tata Tele, Indian Hotels, all of the companies are seeing that pressure. Anything that you would pick up right now, or you would stay clear for some time?
See, if I have to pick up some stocks from the Tata Group, then as I shared in the morning also, that I feel keeping both these stocks aside, there are few stocks such as TCS, Tata Motors, which still are decently placed at the current levels. Now, even TCS has broken out on the upside. It is trading near to the upper end of its consolidation band. And I feel that is unaffected by this news. So that can be looked upon. The second stock that we can look upon is Tata Motors, because even from the current levels, I feel that the trend is firmly on the upside. It is just that this news surrounding the Tata Group is giving a good buying opportunity, a good dip at lower levels. And it's just 1% in case of Tata Motors right now. So I feel a level between 1015, 1025 would be a decent entry point with a stop loss at 1000 rupees.
Okay, so 1,000 rupees stop loss. Tata Motors could be a good buy at this levels, and you're already seeing a bit of recovery there. Deven bhai, your take on Tata Group stocks and insurance stocks this morning. Are you seeing an opportunity in Tata stocks, and what would you do with the insurance play?
So I think the fundamentals of Tata Consumer, Tata Motors, they remain pretty strong. Tata still is giving a good amount of, I think, confidence, largely because of the fact that on one side the input cost is under control, and on the contrary, I think it promises to improve going forward. And on the other side, the demand scenario remains pretty strong for the commodity per se. So all in all, put together, I think the Tata Steel as a commodity company, I think is showing a good amount of prospects for growth going forward. So selective companies within the Tata Group, they continue to hold good promise, including Tata Elxsi for that matter, or Tata Power for that matter. So we remain selectively bullish about the company and their prospects. And any corrective downsides, I think one which we got recently, Tata Power, I think are the opportunities that we probably consider for adding them to the portfolios.
Right. Just very quickly, if I can get PVR Inox on the screen. Remember, we had an F&O guest give out a buy call on this one. One very important factor to note for all our viewers is Amit Goel indicated that on a closing hourly basis, 1380 is an important level of support. So if you are tracking this counter, watch out for 1380 on an hourly basis to see if the stock should be if you should be considering cutting your positions, but until then, it remains a long trade by Amit Goel. Apart from that, Sudeep, I'm going to come to you. You had two buy calls on PNB and L&T. A quick update on both those counters in terms of trade, because the viewers are listening and executing those trades. It'd be nice for them to know how do you feel about it after the markets have opened.
Absolutely. PNB, I feel, has even shown more strength post-opening, and it is trading at its highest levels and closer to 132.60, the highest level on 16th Feb. So even all the lot of other PSU banks are also showing positive traction. So I feel overall as a pack, PSU banks can still be looked upon, and specifically PNB. The second stock which I have shared is L&T. So if you see L&T also, that stock also is decently placed, maybe 0.5% down, but overall 36.20, 36.30 seems to be a good support zone, and I feel from the current levels also it can be added, and the upside levels are intact, closer to 37.40 and 37.80 on the upside.
All right, we'll take a very short break. Thank you so much, Sudeep and Deven, for speaking with us today. We're going to take a break, but we're coming right back. Piper Serica's Abhay Agarwal joins us on the other side to take you through what your next move should be in this market. Stay tuned. Welcome back. You're watching India Market Open. It's a tepid day for the markets. Range-bound trade completely flat. The Nifty just about 5%, 5 points down, just completely flat at this point. Tata stocks are the ones which are in news. You're seeing some signs of life in, life insurance companies because of good Feb numbers. Telecom not doing too badly this morning, but overall, no great direction. Now, what should you do in a market like this? Abhay Agarwal, founder of Serica, is joining us on the show. Abhay, great to speak with you again. Just wanted to start with, I would say, the news of the day or the newsy pack of stocks of the day, which is on the Tata Group. Earlier, we were asking our experts whether this is an opportunity to buy into some of these companies, well-run companies, most of them well-valued companies, and now a slight negative sentiment because of news flow based on speculations. How would you look at the events around Tata Chemicals, Tata Investment in the last few days?
Yeah, good morning, Tamanna. Great to start the Monday morning with NDTV Profit. We have been watching this whole Tata story unfold. We haven't participated in it because, frankly, there's too much of speculative interest that comes in from, some of the short-term investors looking for an interesting play for the short term. And the problem is that it's not really limited only to Tata Group, Tamanna. It's, we are seeing that in a market that is not topping out or getting into a consolidation zone. There is a lot of news-based price volatility, whether it is positive news or negative news. There is tremendous amount of volatility that I think generally the investors should be careful about, placing their bets on base of a certain expectation of an event. And I think this is a classic examples. We are very positive on all of Tata Group companies. I think they are run very well. Valuations are not stretched. So from a long-term investment perspective, all of them are good. But buying them only on the basis of this news is I think, a little premature, I would say, Tamanna.
Abhay, hi, it's also Samina joining in. I'm going to move focus on the Tata Group companies to all the action, the overdrive SEBI has been in, and of course, the regulator in every way. GM has been barred now from being the lead manager on issuances of NCDs. The stock, of course, is, reacting negatively for very obvious reasons. But if I have to extend this conversation, do you think this could have a contagion effect on other capital market players and we could see some pressure building up in terms of what the regulator has been doing?
Yeah, Samina, good morning. This is, so I think, first of all, I would like to compliment both our regulators, RBI and SEBI, that they have been on the ball. They have been very proactive. They have used data science, data analytics, using technology very well to figure out discrepancies. Because what they are reporting now, the data that they are using to back up their actions is clearly based on pretty deep analytics. It is not possible for somebody to humanly do that. Now, in every sector, and I would not go to the extent of calling players good players or bad players. I think there could be oversights, there could be genuine mistakes. I don't know. But clearly, this action is going to give all capital market players, all capital market intermediaries, anybody who we call capital market infrastructure companies, a pause for thought to say, don't get carried away. If there is a law, stick to both the spirit and the wording of the law. Don't interpret it to suit your own convenience. So I think in the medium to long term, this is a great move. It will clean up the capital market otherwise is pretty strong. So I'm not worried about the capital markets in India, but there is always room for improvement and there's always a room for pausing to take corrective action. So I think this is what it has done. And, so for longer term investors, it's absolutely good. For short term investors in some of these stocks, they may feel the pain. But I'm sure these companies are strong enough to recover from this and get on.
Does that mean, Abhay, the stocks like IFL Finance, JM Financial would be on your buy list? I mean, at some point, they do become attractive, I'd imagine, right? The price, the risk-reward becomes favorable for some of these players. And also in that same breath, you do own Angel One and CDSL. Is it time to take some profits off the table on back of stretch valuations there?
Yeah, so Samina, we also have CAMs in our portfolio, and we see Angel One, CDSL, CAMs, and these have been multi-year holdings. You know, I think we have had them since all of these stocks came up with their IPO. They have done well for us, and we see them as very core participants of India's capital market growth story. So we are, let's say, at about $4 trillion market cap. We're going to $6 trillion market cap over the next 3-4 years. We're going to go to 10, 10 will become 12. So the direction is quite clear. Now, in that situation, if you have companies like these that we named, and none of them are buy recommendations, by the way, as a disclaimer, but directionally, if you look at them, the leadership positions have already been created. Angel One has a 20% market share in retail broking. You have CDSL in a dual player market along with NSDL. You have CAMS along with K Fintech in a dual player market. So industries are consolidated. Valuations may look stretched, but that's also dependent on the predictability of earnings growth and also the quality of earnings. So that is why I think if you need to back India's capital market growth story, I think these are great choices. On the first question, whether we look at some of the fallen stocks, yeah, absolutely. We are always looking to get in if there is a overreaction technically, and that gives us a buy opportunity. We would always be open to that, Samina.
Just a quick look at what's happening with NMDC. Singapore iron ore futures have, I would say, crashed 4.5%. And you're going to see a bit of pressure there. Let's pull up NMDC steel as well. 2.5%, 3% down on NMDC right now. Abhay, I wanted to get your take on the real estate pack. The index is looking decent today, led by a macro tech. There's QIPs, on offer for a couple of companies trying to raise money. But also what SEBI has done over the weekend by notifying small and medium REITs. How much of an impact do you really see this having?
I think this is a good move. I think it allows smaller investors to add real estate in their portfolio in small units rather than subscribing to the big REITs which are focused only on commercial property or actually buying a house property. So I think this is a good way to create a new asset class and at the same time give money to the REIT managers so they can invest on behalf of investors in residential projects. I think it's a good outcome, a good opportunity that will become bigger and bigger. Also on the real estate part itself, the whole real estate sector has gone through a very extended consolidation phase, starting with the demonetization, then subsequently there was RERA implementation, and then the GST implementation. I think there were continuous series of changes that has completely restructured the real estate sector, made it cleaner, more transparent, and created it into a good asset class for investors to own these real estate stocks. And I think that's what we are seeing in terms of real estate stocks performance over the last 12 months. And I think this new edition of REITs for individual investors, I think it's a very, very positive move. I would welcome it. It allows even small retail investors to allocate to real estate in their portfolio.
Okay, so it is an opportunity for investors to allocate real estate in their portfolio. I don't know if 10 lakhs as an entry barrier is a bit high when you're talking about retail investors. Maybe that needs to be looked at, and real estate stocks may be a better option. Abhay, I wanted your take on the insurance play as well. LIC is losing market share, down another 520 bips in the month of Feb, but the overall AEP growth has been good. Even for the insurance pack, the numbers in Feb have been good, perhaps tempered by a year-end flood. But overall, do you like anything in the insurance space? What would be your best bet? And would it be life insurance versus general insurance companies?
So we track insurance very closely, Tamanna, because we also have a private equity fund where we have made investments in some private insurance companies. Right now, we do not have any insurance company in our portfolio, and for the single reason that the valuations are quite stretched. So while insurance is going to be a long-term story, as just like capital market story that we discussed, but So far, maybe we are wrong, but we have shied away from adding any of the large insurance companies in our portfolio. There is one standalone health insurance company, the largest one, that we are looking at closely. Maybe at some point of time we'll add it to the portfolio. But I think insurance is a very, very long-term story in India. Next 10 years, 20 years, it will just keep growing as there is product innovation, and as the regulator also gets the confidence that these companies can innovate and bring value to their policy buyers. So we track that space pretty closely, but again, the valuations haven't really corrected. The private companies are still at 4 to 5 times embedded book value. So we would probably wait for a better timing to add them to the portfolio.
Very quickly, what stocks currently feature on your shopping list? What is it that you're waiting to correct and go out and add to your portfolio? And also your top 2 holdings in your portfolio that you're currently still constructive on and maximum overweight on.
So one sector that I've been talking about and I think is going to see inflows this year is the large cap pharma space. And I think we have a couple of stocks, large cap stocks in our portfolio already. They are not our top holdings, but we will keep adding to them. And the reason for that is that, again, just like real estate, this is the industry that has consolidated for the last 4 or 5 years. Finally seeing pricing improvement in the US, finally seeing reduction in raw material prices from China and locally. And also, product pipeline is very robust. Some of them have 150 products that will get launched from a single company in the US and in India. So I think this is one sector, the pharma sector, that can hit a purple patch this year. And the second sector, Samina, we are looking at closely is the agrochemical space. Again, small companies and large companies that cater both to Indian farmers, Indian agri sector, and the international markets. I think these are the 2 sectors that we believe there is a lot of value under participation, and we are happy to make our bet with a 2 to 3 year perspective.
Anything specific here, Abhay, you can add in these spaces, especially in large cap pharma when you're talking about, and in the agri space?
So in large cap pharma, again, not a buy recommendation. These are stocks in our portfolio. We have Dr. Reddy's and Divi's. We believe both these companies have done a lot of innovative work. Divi's more so because of the CDMO business that gives them an annuity-like income that keeps growing. And Dr. Reddy's for the reason that it has probably the strongest pipeline of launches over the next 12 months in US and in India. And then in the agrochem space, we have Bayer India, which is one of the largest players in Indian agrochemical crop protection space. And we have a small cap stock called Hanuka Agritech. And we are in the process of researching more ideas in that space.
Yeah, so agrichem is looking interesting. Thank you so much, Abhay. Always a pleasure to speak with you. And talking about the pharma play, on the other side, we're speaking with Lupin. Stay tuned for that.
with a clean as a whistle record on US FDA inspections, a healthy pipeline of launches coming up, and some very interesting and impressive launches done over the last 12 to 18 months. I think Lupin has come out of the pharma pack smelling like a bed of roses. The question only is, as the conversation shifts to reducing pricing pressure in the US and more, what can happen to the pharma space at large, and how would Lupin fare within that? We get in Mr. Ramesh Swaminathan. He's the Executive Director and Chief Financial Officer of the company, about the prospects for calendar year 24 and maybe beyond. Mr. Swaminathan, good having you. Thanks so much for taking the time out. I would love to understand, how do you think about the space? Because when one looks at your performance, it is not depicting what the space entirely has gone through. Sure, most generic pharma companies have done well, but you've done exceptionally well. So first, let's start with, how is the industry, how are the industry prospects looking to you?
Firstly, thank you for having me on, and a very interesting question that you're presenting to me. So let me roll back the clock a little. Over the last few years, the industry dynamics have changed quite a bit. And if you look at, what was perhaps an Eldorado for all the companies, this is really America, it's turned out to be a bit of a famine, in recent times, more because the fact that the OSD business was actually undergoing a big, there's a lot more competition. It actually arose because of the fact that there was channel consolidation, and there's a lot more entry of a lot of manufacturers from India itself, and both actually contributed to, in fact, in some ways, a price erosion of a very different kind. And it is also the changes that were brought out by the U.S. authorities in terms of GDUFA that actually meant expedited approvals and the like. So all of this actually meant that there was a lot more price erosion, and what was actually, as I said, a feast for quite some time turned out to be a bit of a famine. We were also impacted in some ways because of our, OAI situation across various factories and the like. And then came in COVID, which actually impacted all the companies. And there was, of course, no inspections happening at that point of time. And that's where we actually touched on nadir, so to speak. In the last few years, Lupin has been focusing on three things. One is getting our record right on the factory front with the regulators, and there, as you very correctly pointed out, we've done a fairly good job on that. There are a couple of more factories to go, but it's a question of time. The second, we actually focused a lot on getting our cost structure right, and I could talk about it at length. And third is, we want to get our buoyancy back when it comes to the top line across various markets, and that's where we actually did a fairly good job, and the results are there to see. Speaking about, in fact, the cost front, we did a number of things. Firstly, we focused on what we, the businesses that we actually wanted to close down, which are not making monies for us, is essentially the specialty business in America. We also cut down on, in fact, the NCE spends, because that is not yielding the results, whilst the risk is what they are. We also looked at, in fact, a lot of inefficiencies across the system, in terms of looking at, in fact, the gross margins, worked on, in fact, alternate vendor development, looking at routes to synthesis for various molecules, looking at productivity of labor from potentially the factory end. So we rationalized a number of people out there. We rationalized people at the R&D end and so on as well. And we also added a number of people on the ground in terms of the sales force in America and other markets where we thought it was important for us to do so. And all of this actually have started yielding pretty good results. On the top line front, whilst we had a very impressive, number of products that we wanted to bring to the table over time, because of the fact that we had OAI across various factories, we are not able to kind of launch it because we are not getting the approvals also. And over time, they lost their potency. But in the meantime, we had also pivoted to more complex products because the industry was kind of pivoting to that. And we have been very successful in focusing on the respiratory portfolio, and going ahead on the injectables and the like as well. And of course, in recent times, we've had pretty good launches, which brought the buoyancy back when it comes to the American market. We launched, in fact, 40% of our turnover in America today comes from the respiratory portfolio. We had albuterol. We also had, in recent times, we have had Spiriva. But we have we bought into brands like Zopinex. We have Bravana, which we brought to the table a few several quarters ago. And likewise, we did the same thing across various of the markets. We actually see respiratory and injectables as being global platforms, and we'd like to lever this portfolio across various markets. In Europe, for example, we have Foster, and that was first introduced to in UK, and over time we kind of the generic version was launched in various of the markets as well. So that pivoting has really helped us to kind of grow the margins, and I would think going forward things are only going to be better.
Could you explain that? I mean, one, there are two parts to my question actually. One, having a great control on the cost structure is welcome if that is accompanied by maybe reducing pricing pressure or better pricing as opposed to just price erosion, that only aids. Now, the conversation has been around mild price erosion. To your mind, because this is such a cyclical business, are we at a stage in the cycle from where we could move from a mild price erosion to maybe better pricing as well, or is it difficult to predict, especially in the US market?
So I actually addressed some parts of it in my previous answer when I spoke about the fact that there has been channel consolidation, and that obviously meant the prices were eroding. So there are other factors that I spoke about also. But things are changing a bit because a lot of companies that had got into America thinking that it's going to be an Eldorado forever, saw that the returns are not so much really. So to the extent they started shedding their portfolio, and a lot of biggies also started doing that because a lot of the products had turned to to inconsequential margins, so to speak. And it's not very different with Lupin. We also shed some parts of a portfolio. So much so that there was actually a shortage of products in America. Even as the date that we're speaking, it's close to about 350 odd products. It's also come forth because of the fact that a lot of companies closed down because, as you would know, inflation was prevalent across the globe, including America, and interest rates are rising. When interest rates are rising, a lot of those companies which had levered themselves from a debt perspective found it unviable to carry on business, and that meant factories are closed down. And because of a combination of shedding a portfolio and the closing down of, in fact, supply locations, meant that prices were a lot more stable because of the supply situation itself. That's hopefully this will stay this way for some time, given the fact that it's not going to be easy for companies to kind of open up newer factories and the like as well. And people have shed their portfolio. It's not easy to come back again. But I mean, as I said, it's still early to kind of predict that, because essentially, there are more than about 150 producers of generic products applying for the American market. And for any molecule, we are looking at 20, 25, 30 players, so to speak. So even if the figure comes down by half, it's still going to be pretty intense competition. So I am, whilst I'm pretty hopeful and, I would think that this benign regime would certainly stay for some time to come. I need to take it, on a quarter-on-quarter basis. As of now, it looks like it's going to be stable, but you never know for the medium term or for that matter, the long term.